In the current affairs this week, the week ended 8th of January 2026. The start of this week saw the announcement regarding the India-US trade deal. The important highlights of the deal were that Indian goods which were attracting a tariff of 50% when they were exported to the US will now be subjected to a tariff of just 18%. In return, India would be halting the purchase of discounted Russian crude and will shift its energy needs to US and Venezuela. India has pledged to buy US goods worth $500 billion across a period of 5 years, which is going to be a big task for India finding goods which would be attractive enough in terms of the pricing when it would be importing goods from the US. India will cut its import duty on US almonds, apples, wines and medical devices, etc. Now, if we look into the analytics of this deal, the first and foremost advantage which India is having vis-a-vis its other competing partners is that China, when it exports its goods to the US, is subjected to a tariff of 47.5%. Vietnam is subjected to a tariff of 19%, while Indian goods will now attract just a tariff of 18% when they are exported to the US. The another very important aspect which we all need to understand in respect of this deal and which has not been discussed a lot is that because of the reason that this deal was not signed between India and the US, the Indian rupee was weakening and dollar was gaining strength. And if this scenario continues, then yes, we might end up buying cheaper Russian crude, but then we would be paying more dollars in respect of, or rather more rupees on account of weakening of the Indian rupee on all our imports. So the signing of the deal was quite important for India from this aspect. When I say that the Indian rupee was weakening, yes, it has weakened in last 1 year by around 3.5%, while as the US dollar has weakened against the basket of major currencies by 9.5% in just last 1 year. So here is a scenario where against the Indian rupee, the dollar was gaining strength, while as it was losing value against the balanced part of the world. This kind of a situation was not in interest of India. So signing of the deal from this aspect, according to me, is also something which was very important. In a few years from now, the Indian economy, which was basically a local facing economy, and Indian goods, rather Indian manufactured goods, which were of a certain quality and were at a certain price, will see a complete change on account of not just the India-US deal, but the many deals which have been signed by India in the last few months. One needs to be cognizant of the fact that the way the present US administration is, any deal which is agreed upon might come under a change if it does not suit the geopolitics and economics of the US. The European countries and the European Union had signed a trade deal with the US, but they were threatened with 25% tariff on the Greenland issue. Coming to the Indian stock market, Nifty 50 this week was up by 1.5%, Nifty mid cap was up by more than 2%, and Nifty small cap was up by 0.66%. This was the impact of the signing of the India-US trade deal. The FIIs and DIIs both were modest buyers in the Indian stock market to the extent of 2,500 crores each. And this was a week where both of them bought the Indian stocks. The Nifty IT index was down by 6.38% in just 1 week. And on a yearly basis, it is down by more than 15%. Nifty Realty Index, which was a gainer this week, which was up by more than 5%, is still at a loss of 9.73% on a yearly basis. On the commodity front, Brent crude corrected by 3.73% and ended up at $68 to a barrel. Gold declined in India by more than 8%, but the yearly gains in gold still stands at around 80%. Silver this week declined by more than 27%, but still on a yearly basis it is plus by 158%. The US dollar, as the impact of this deal, ended up at 90 rupees 60 paisa to a dollar. And this is against the high of 92 rupees 0.22 paisa to a dollar, which was the high in last few weeks. Nasdaq corrected by 1.87% and S&P 500 corrected by a modest 0.09%. MSCI South Korea corrected by more than 5% and MSCI China corrected by around 4%. The decline in Nasdaq, South Korean and Chinese market was on account of the AI related companies or tech related companies being sold off by the investors on account of fears on the valuation side. That is all for this week. Thank you.